I think long-term gold's going to do very well, but I do think it's going to have a much bigger pullback and kind of come all the way back down. If I zoom back out on this chart, I think we could see gold want to come back down into potentially this kind of range right down in here, 2100, 2200. That will be a very big pullback, but that will also probably mean the equities market, the economy is stalling out. So we'll have to see how this unfolds, because right now money is really just flowing out of these defensive plays. So Trump got in, and Elon, they're kind of a team, it seems. We're seeing everybody pile into coming out of gold and moving into equities.
Gold moved lower in the first week of November after hitting a new all-time high on the first of the month. According to the World Gold Council's gold return attribution model, gold was pressured lower by strength in the US dollar and momentum factors, including the lagged gold price, gold ETF outflows coming off a solid month, and a drop in COMEX net managed money net longs, reflecting the likely unwind of pre-election hedges. With over 20 years of experience in the financial markets, ChrisVermeulen specializes in technical analysis and is known for his ability to identify market trends. While analyzing the daily chart, he suggests that gold could see a significant pullback in the coming months, potentially down up to $2,100, which likely coincides with an economic slowdown. He forecasts a gold pullback but remains long-term bullish, seeing it as a unique buying opportunity. Gold has been a standout investment in recent months, outperforming traditional assets such as stocks and bonds. In his assessment, Chris suggests that gold correction might reflect broader economic conditions, as money flows out of traditionally defensive assets like gold and bonds. According to him, the strengthening dollar is also impacting gold as investors turn to assets with growth amid rising market optimism. The dollar advanced near a 7-month high against major currencies while the benchmark US 10-year yield climbed. Gold is likely to be under pressure in the near term due to growth optimism. Risk-on sentiments will lead to further ETF outflows as investors flock to Bitcoin and other risk assets, denting the metal's safe haven appeal for the time being. Now we present the clips of ChrisVermeulen's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I've talked about this several times because this is a multi-year chart pattern, but this is the monthly chart of gold. And you and I have been talking about how, based on the start of the last super cycle back in 2001 to the 2011 top and the 2015, 2016 low, I use Fibonacci extension. This gives us a very clear upside levels in gold where we should find a pause. More or less, if it hits this 618 level, we generally see if the market has a pause at that level, we almost always go up and hit that 100% measured move. And this 2750 area has been hit. And so now we're starting to see gold reverse. And, you know, this is what I talked about actually a long time ago. I wrote an article back here when gold broke out, and this is where Eric Sprott had talked about it. He read the article and talked about how he got even more heavy into precious metals, excited about this next new move up. And I talked about this back then. 2750 is the next major measured move based on this last run in correction. That's where we should go. So as you just kind of mentioned, gold's definitely giving back some gains. It's hit resistance. It's invisible resistance because it's trading at all-time highs. So there aren't sellers there from before, but based on Fibonacci, this is where momentum should stall and run out of uptrend, up power. And that's what we're starting to see. But if we zoom in on the daily chart and we take a look here, I mean, gold's had a really nice pullback. It's on pretty strong volume. I do think we could see a bigger pullback over the next, several months. I think we could see it potentially pull back down into, potentially all the way back down to this 21 range. But on a shorter term basis, it is definitely right down at its first support trend line, which is this pivot low from about a month and change ago. So it's definitely coming down here, trying to find some support. I think long-term gold's going to do very well, but I do think it's going to have a much bigger pullback and kind of come all the way back down. If I zoom back out on this chart, I think we could see gold want to come back down into potentially this kind of range right down in here, 2100, 2200. That will be a very big pullback, but that will also probably mean the equities market, the economy is stalling out. So we'll have to see how this unfolds, because right now money is really just flowing out of these defensive plays. So Trump got in, and Elon, they're kind of a team, it seems. We're seeing everybody pile into coming out of gold and moving into equities. So they're coming out of gold and bonds. Bonds have been moving down dramatically as well. And a good relationship to look at this is actually my CGS strategy, where we focus on the SP 500 daily chart. Our last trigger here, the SP 500 has been moving up. This is when our strategy said, hey, for some reason, money is piling into the equities market, and the SP 500's had a very nice run. And on the flip side, we've got, bonds moving to the downside. So money's coming out of bonds and it wants to get put to work, and it's moving into stocks and moving up. And this is what we're seeing in gold as well. Money's coming out of gold now in a bigger way, and moving into something that's going to pay dividends and that has some upside potential. And so that's kind of where we are right now, is just money coming out of gold. The dollar's playing a role. Obviously, the dollar's got a very strong pop. If we look at the dollar here over the just today alone has had a big pop. So that's putting pressure on the metal space.
Various market experts, including ChrisVermeulen, explain that silver has followed gold's price movement, hitting resistance and now pulling back. He notes that while the upside for both metals may be limited in the short term, there's potential for them to rebound and test recent highs as the stock market faces a possible downturn. Gold is arguably the best performing asset class in 2024 and will continue to be among the best performing next year, no matter what happens to the global economy. While the yellow metal is traditionally seen as a low-risk, low-return investment, an investment of last resort, it has outperformed equities, which is no mean feat considering that the S&P 500 has closed at record highs at least 50 times so far this year. As of September 23rd, gold was up 27.1% year-to-date, compared with 20.8% for the S&P 500.
Silver's done pretty much the same as gold. It has run up. It's hit its resistance area. It's getting rejected now. It's also a very critical, level on the chart from in history. We have two significant highs. You could argue actually there's another high right over here, and we had a significant low. So it has definitely hit resistance, and it's pivoting down from a Fibonacci extension kind of target. You can see more or less it has come up and hit that 100% measured move. So overall, gold and silver and miners are kind of all the same trade. It's just some are a little more volatile than others. But overall, I kind of think most of the upside is done. Now, this is a sweet spot in the stock market. When we go back and look at cycles, if I was to pull up just kind of general cycle of the market here, typically precious metals do well near a stock market top. And what we could still see is gold and silver rebound and go back up to these highs that they've recently seen over the next month or two or three, and actually continue to hold value. And maybe the stock market is going to run out of steam. What happens generally in this stage is we see gold and silver hold their value or move higher, and the stock market actually starts to sell off and go down, and gold and silver will do very well. So we just have to let this unfold. We're in that. Gold and silver have hit those levels. I think the election has put new energy into the stock market, so it's giving it another push, and it's pulling money out of these defensive plays and going into stocks. So we definitely have some turmoil, short-term turmoil, but I do think precious metals are going to probably strengthen and find support here shortly and want to go back up to test those highs. 2,800 for gold, maybe this the high that it saw back over here, this 3450 area. It might want to work its way back up there, and the stock market will eventually, I think, run out of steam. But the question is, when will the stock market run out of steam, and when will people want to start getting out of the stock market, and we start to see a big sell-off, which will pull the equities down eventually, or sorry, the precious metals down more down the road. But right now, the momentum is going into stocks, and it's coming out of, usually if one asset class is going up, it means another one is going down because money's coming out of one and going into another. And so right now it's just the, out of gold into equities. And we just need to let this kind of Trump bump or pop kind of fizzle out here and kind of go from there.
However, November has proven otherwise for investors who thought gold's price surge would continue unabated. The price of the precious metal has dropped this month from record highs, and the future is uncertain. Gold's recent 44% surge has led to a considerable post-election correction, but a favorable backdrop suggests it could rally to $3,000 to $3,500 in 2025. Just be sure to keep your investment in check, as most experts advise limiting it to 10% or less of your broader portfolio. Given ChrisVermeulen's outlook on gold and silver, How should investors position themselves in the short term and long term to capitalize on the potential opportunities in precious metals? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.